This is the final earnings all-star video for this very busy earnings week, and it's on the gold miners. As promised, I'm doing a video solely on the gold miners. How did this happen? Well, I was looking around for hot charts and I kept coming across gold miners one after the other. So these are 5 gold miners all reporting this week that are red hot. What's going on? Let's take a look. Okay, the first one out of the gate is Agnico Eagle Mines. And yes, I chose the hottest of the gold miners. This is a Canadian gold miner. It's owned by many. It's on the big side. And it's Zach's #1 rank, as you can see. But take a look at this chart. It is kind of wild. It does remind me a little bit of the AI revolution charts initially in 2023 when those earnings really started to take off. So we don't have the usual, base up and to the right that's really stable. No, we have up and to the right, but the analysts are trying to catch up. And that's because gold has busted out to new all-time highs, $3,500 an ounce, and it's held over $3,000 an ounce for the entire second quarter and now into the third quarter. And that means tremendous earnings for the gold miners. As long as they're executing, getting it out of the ground and selling it, these are an issue sometimes. But as long as they're doing that, then this should be record earnings. And how do I know that? Because Newmont, one of the largest gold miners, has already reported earnings. And what was it? It was a record on earnings, a record on free cash flow. And then they raised their share buyback plan. They're paying off debt. It's a good time to be gold miners. They've waited just about 20 years for these market conditions. So the charts are kind of wild. So as you can see with Agnico, up and to the right, but look at this earnings surprise. It's an earnings all-stars, which you can't say about all of the gold miners, but they only have 2 misses going all the way back to 21 and 22. So they're very good at projecting out to the analysts what is going to happen with those earnings and what is happening. You can see it on the chart up and to the right, but look at it on this EPS growth rates chart. You can see 2024 is when the gold prices began to rise. So 89% growth there, 57% expected for 2025. We have this little paltry for 2026, but that's okay because that's still a ways off. The analysts don't know if these prices are going to hold, so they're not worrying about 2026. They're still trying to catch up with 2025, and that's why we have the #1 rank. And just out of curiosity, is anyone raising after we got that Newmont in the last week? Let's scroll down. Yes, indeed. 2 are higher for the full year, but look at the quarter, 2 are higher. Newmont had a big earnings beat. We now know kind of how good it's going to be, and the analysts are now projecting onto some of the other big cap gold miners as well. So we got that #1 rank because it's looking good. So watch free cash flows, watch what they're doing with the cash. Many are just going to expand the share buybacks because they're not trusting that it's going to stay above 3,000. So they're not necessarily going to raise the dividend, but they may pay out special dividends with the cash too, because that's easy to do. It's a one-time thing. In addition to the normal dividend, then they do the variable one. So this is something to watch. Agnico, they're Canadian, so that's fairly stable. Let's move to the next one because it looks the same. Kinross is the next, and they are also Canadian, one of the large caps, also a #1 rank, as you can see. But look at this chart. If I told you that this was Agnico, you would think so too. Great earnings surprise track record, just that one miss earlier this year and barely, right? 13%. So it did miss. Considerable miss there, but look at the earnings up and to the right. Again, it's all going to be kind of the same. Scrolling down, 94% earnings growth this year. And then, of course, next year, the analysts are kind of on the sidelines. By the way, these stocks are cheap because they're trying to catch up to where the earnings are going. And the earnings growth is just so dramatic that they now have a cheap forward PE, even at the highs. So trading at 12 times, look at the PEG, 0.5, Both of these are values. I own a couple of miners in the value investor, not this one. You can pick and choose. They all look good here, but, or you can just buy the ETF. The GDX is that ETF. Okay, moving on. We have Alamos Gold. AGI is this ticker. It's a number 3, so we don't have the number 1 rank. It's a little bit smaller in market cap, but still not too small at 10 times. It's a little bit iffier on the beats here. It did miss last quarter by a lot, 26%. But like I said, it's about execution when you get these market conditions. Are you getting it out of the ground? Also about execution on its other types of metals. Most of these companies don't just do gold. They're finding silver and a lot of times copper, sometimes even nickel. It depends on the miner. So make sure you investigate. If you are curious, there's high prices going on with just about every metal right now. So it doesn't really matter what else they're mining because the story's pretty good there too. But gold still breaking out. It's what you want to be owning. Okay, earnings up and to the right. Let's look and see what this one's doing. This is Alamos, 66% this year. And actually, the analysts are more bullish on next year than we've seen with any of the others, 33% there. Higher forward PE at 19, but that PEG ratio is still staying under 1, which means growth and value. Then let's switch over. This is the 4th one. And is it breaking out as well? Eldorado Gold, also Canadian. They actually mine in interesting locations, Quebec, Greece, and Turkey. Eldorado Gold missed the last quarter as well. This only goes to show you how difficult it is. And also one other thing, this is a smaller gold miner, just 4.2 billion. So that is considered on the small side for the miners. There's going to be less analysts covering the smaller miners. And so you might only have 1 or 2 and they might not get it right. That's where you get an earnings miss, but they have a nice earnings surprise track record before this. So I'm liking what's going on here. And then you see up and to the right, it has to be, what are they ranked? They're a 3, but scrolling down, Eldorado, lot less growth here. It had a huge growth in 2024 on the earnings side, just 12% expected this year. But look at 26, 63%. You might want to check into what's going on that the analysts already know it's going to be this hot for 26, even though we don't know the price of the metal. Maybe they're getting more out. Maybe they have a mine that is going to be increasing production for next year. And that's why we got the higher earnings. But it's cheap, 11 times. PEG is really cheap at 0.34. So that's Eldorado, smaller miner. And then the one that I own that I didn't realize was reporting this week, strangely, I thought it was the week after, but they might have just updated it, is AngloGold Ashanti. And it's a number 1 as well. So we're back to the number 1s. It's on the bigger side, market cap of 21 billion. And this is an American miner. They're headquartered in Colorado. They do mine globally. And you can see the stock is trying to break out there. Like I said, I own it in the value investor and my own personal portfolio. But look at this chart. You can barely even see the earnings beats or misses. I think there's a beat in there. We had a couple misses here. It's been a little iffy. It doesn't have as much coverage as some of the others, even though it's a bigger miner. So we're just kind of missing the arrows there. But earnings, look at the earnings growth for this year, up 125%, negative for next year. So we'll see what happens there. They are launching a mine. So that's been, or no, sorry, that's my other mine. They have been acquiring. They just acquired another small gold miner. So a lot of these gold miners are going to be doing acquisitions. They've got the cash. They want to acquire more of the product, obviously. And so instead of developing their own mine, which is very cash intensive and risky, to be honest, they are just going to acquire. So trading at 10 times, we don't have a PEG ratio on it, but it's soaring here, and we'll see. It's got the Zacks number 1 rank. So the analysts, let's just take a look at it real quick. Are they raising in the last week too after Newmont? No, but in the last 30 days. And that's how it's getting the number one rank. So we'll see. Not as many analysts on AngloGold Ashanti. So it gets a little more wonky, as I said, with what's happening with those earnings. But as you can see, all five of these near their all-time highs, and gold near its all-time highs. It's hovering above 3,300 for weeks on end. Newmont had 3,320 as their average gold price for the entire quarter. That is more than almost $1,000 more than a year ago. And that all just goes to the bottom line because costs are much, much lower. Anywhere from $1,500 to $2,000 an ounce. So when you get it at these levels, it is where every gold miner wants it to be. Will gold go higher? We don't know. That's going to affect the earnings going forward. But for right now, enjoy these times with the gold miners. No one knows how long it's going to last for, but we are in a bull market on all the metals, both precious and otherwise. So tune in to the gold miners this week. Should be a fun ride. So as you can see, there's a lot going on. In addition to these gold miners, we have just tons of red hot stocks, 150 S&P 500 components, 4 of the Mag 7s. It's still going to be pretty hot next week as well, believe it or not. I know everybody gets bored. The Mag 7s, except NVIDIA, are done. But there's a lot still to come. So make sure you subscribe. Get us on Zacks.com/YouTube. Follow my X, my Blue Sky, my Stock Twits feeds. Get us somewhere because it's going to be a wild one this week, next week, and for a few more weeks before this earnings season winds down. So I'll see you again next week with some more earnings charts.